Hello, everyone. Thank you so much for joining us for our first weekly wrap-up of 2026. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group. And I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Thank you, Jeremy. Thanks for our listeners jumping on our first call for the new year. So thank you so much for listening to us today. We saw the S&P 500 in the year up about 16.5%. The Nasdaq Composite up about 20.5%, and the Russell 2000, that small cap focused index, up about 11.5%. Internationally, this is where the leader was. We saw the MSCI EAFE up about 28% and the emerging markets up about 30%. That was the strongest performance out of all the indices, at least that we've covered. If we look at the volatility, the VIX ended the year near lows after spiking above 60 in April during that, if you remember, the tariff talk, when the S&P fell about 20%, and then a couple weeks later really made its way back up. What sectors outperformed? Surprise, surprise, technology and communications, again, up about 20%. That Med 7, the 7 largest stocks that make up the S&P 500, were the drivers. They were led by AI and the enthusiasm for AI and the movement there. Then some valuation concerns set in, emerging towards the latter part of 2025, kind of moderating their returns a little bit. And we started to really see the market broaden out. And that's what we really felt we were going to see all year long. It continued really towards the end of the year, certainly towards and starting again at the beginning of this year. Fixed income, the U.S. Treasury yields. We saw the 2-year yield dropping 76 basis points to about 3.5 and the 10-year yield at about 4.15%. Commodities, that was the big leader this year. Gold and silver both up their best return since 1979. And I don't have the exact figures for gold or silver, but I think we had gold up somewhere around right at around 70% or the high 60s and around 100% for silver. So huge moves there. But on the flip side of the commodity front, we really saw oil, its worst drawdown since 2020, when we didn't see those supply constraints or threat of those constraints really come to fruition. We really saw oil settling down. Cryptocurrency did not have a winning year. It was off. Bitcoin was off 7% for the year after hitting a high of 127,000 in October. On the economic data front, we saw the US Q3 GDP, gross domestic product. That was a positive 4.3%. Now that was well above expectations of 3.8% for Q2. So we're seeing the economy still expand. We're seeing the consumer spending up a positive 3.5%. So if you feel like you have a job, you're comfortable with it, you feel like extra funds are there, you're spending it. PCE inflation. Now that was a positive 2.8%. So that was a bit above the Fed's target of 2. So a little bit of work still needs to be done there. But the CBO, the government shutdown, may cut that Q4 GDP number by about 1 to 2 points, but that'd be likely pretty temporary. So if we look at consumer confidence, that fell for the 5th straight month to about 89.1. Fed policy, when they came out with the minutes, we had the majority voting for a rate cut amid some slowing job creation. Now we're showing some unemployment increasing a little bit, but not out of control. We just don't want to see it get out of control. And as long as we have earnings, we have a reasonable unemployment market, I think the market can still do well for 2026. But let's look overseas over at China. Their CSI 300, that was a positive 18%. That was the best in 5 years. With their manufacturing PMI numbers at 50.1 in December, that's expansionary for China. Now, looking at this week or the week ahead here, we're going to be looking at some key events. We're going to be looking at the possibility of the Supreme Court and their decision on the tariff legitimacy and what effects that may have with the administration refunding, if they have to, what they've collected. A selection of new Federal Reserve chair that will be coming in. What would their role be? Is their role going to be cutting a lot more aggressive than the current Fed and the chair that's in place now? And the ongoing Venezuelan crisis. What what risk will that bring with geopolitics? And the corporate earnings, that's always going to lead, if you might, in terms of where this might go. And if we still believe that earnings are going to be positive, we do feel that the market can follow to a certain point. U.S. economic data. On Friday, we're going to see the unemployment report. It is forecasted to see a positive 55,000 jobs for December. The prior month was a positive 64. May see some significant revisions due to some low participation rates. Now, the labor market indicators like JOLTS will be coming out. That's job openings. We'll see the ADP private payrolls, challenger job cuts. And then the other releases that will be coming out, we'll look at the ISM, the PMI survey, factory orders, trade balances, delayed housing data will be rolling out, and some preliminary consumer sentiment and inflation numbers. And we'll also be looking at some inflation updates for Europe, Australia, and China. Jeremy?
Thanks, Graham. So I had a question for us because we finished the year pretty strong in the markets for 2025, and going into 2026 here in the first quarter. How do you see the markets doing kind of going into this first quarter of the year?
Yeah, kind of piggybacking off what I said just a minute ago. If we got earnings showing up and increasing, which we do expect, we think the market will follow. You always have to expect volatility, so don't be surprised if that happens. But I think if earnings are there, so will the market. We'll just have to wait and see how well those earnings show up.
Gotcha. Well, Graham, we always appreciate the information and expertise. And thank you to our listeners checking in with us for the first one of the year. And we look forward to seeing you the rest of 2026. Talk to you soon.
Take care.